If you are building fintech or payment products in the UK, sooner or later you hit the same wall. Licensing, payment institution, electronic money institution, bank license, MSB, appointed representative. Most founders get this wrong, not because it's complex, but because no one explains it from first principles. So in this video, I want to do exactly that. I want to explain what each license actually allows you to do and do not allow you to do, and when each one makes sense depending on your product. No legal trivia, just practical knowledge. Let's start with the lightest one, payment institution license. Payment institution license allows you to move money but not store it. Think of it as a plumbing. You can send money from A to B, you can process payments, you can initiate transfer on behalf of users, but you cannot hold customer balances. You are allowed to touch money only for as long as it takes to execute a payment or transfer. That's the key line and the key border. You have to always keep this in mind. You are a conveyor belt, not a wallet. This is why early Wise started as a payment institution. They were moving money across borders, not offering accounts. Once you want wallets, cards, or balances that sit overnight, the PI license stops working or hits the wall. So when does it make sense to obtain a PI license? If your product is about payment in motion, remittance, merchant acquiring, payment initiation, open banking data. It's cheaper, faster, lighter than the other options, but it caps your product ambitions very quickly. Next one, electronic money institution. This is where most fintech confusion starts. An EMI license lets you issue electronic money, which in practice means one thing. You can hold customer funds in a wallet. You can let users keep balances. You can issue prepaid or debit cards. You can build multi-currency accounts. From user perspective, this looks like a bank. From regulatory perspective, it is not. E-money is not a deposit. You must safeguard 100% of customer funds. You cannot lend them, you cannot pay interest, you cannot reuse that money. The funds sit ring-fenced, usually with a partner bank. That's why EMI products feel safe but do not have FCSC protection. Revolut in the UK operates under an EMI. Wise upgraded from PI to EMI for the exact same reason. This is the sweet spot for most fintech startups. You get account-like functionality without becoming a bank, but you trade flexibility for safety. Next one, bank license. This is the heavyweight option. Bank license lets you do what exactly EMI does not allow you to do. Take deposit, lend money, create credit, pay interest. You are now allowed to use customer funds as a part of your balance sheet. This is why bank operates on the fractional reserve model, and that's why banks must offer FCSC protection. In exchange, the regulatory burden explodes. Dual regulation, capital requirements, liquidity rules, governance scrutiny. This is why becoming a bank takes years, not months. Monzo and Starling went this route because they wanted the full control over lending and saving. If your product does not require lending or deposit taking, a bank license usually is overkill. However, I also have to mention that now fintechs seem to change their mind and they are going after banking license from very beginning, not to limit themselves to product range that they are offering, and also it becomes difficult once you scale to obtain the banking license. Next one, money service business. This one is misunderstood a lot because money service is not an FCA license. It is an HMRC registration for AML supervision. If you exchange physical currency, cash checks, run a bureau de change, you must register as an MSB. This registration does not let you build payment application. If you want to transfer money digitally as a service, you still must obtain PI or EMI licenses. MSB is about anti-money laundering coverage, not consumer protection. Think of it as like checkbox, not a product enabler. And finally, appointed representative and agent models. Here's the shortcut most fintechs use. Instead of getting licensed, you operate on someone else's license. There are two options. If your activity falls under financial services law like lending or investing, you become an appointed representative. If your activity is payment or e-money, you become an agent or distributor of a licensed EMI or PI. This is how most card programs start. You plug into an EMI, they hold the license, you own the customer experience. It's faster, cheaper, and perfect for early-stage products. However, the downside is control. Your principal decides your limits, your margins are thinner, and regulators do not like firms staying here forever. Most successful fintechs eventually graduate to their own license. So, how to choose the right path? Here's the simple way to think about it. If you move money only, PI. If you store money, EMI. If you lend money, bank. If you just want to launch fast, agent or AR. Licensing should allow product roadmap. Licensing should follow your product roadmap. Wise did not start as a bank. Revolut did not start as a bank. They operated when the product required it. The fastest way to kill a fintech is over-license too early or under-license entirely. Start simple, stay compliant, and follow your product roadmap. This is how you will build a successful company in the long term.